Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Asian Session Live Market Analysis and the Forecast webinar, giving the forecast for this week 17th to 21st of April, that is Monday to Friday. So today we are on 17th of April, so it is the third week of April. So during that of the mid-month, the players are known to make the trending move. So let us see how exactly the players are expected to make moves in the case of the majors and the commodity pairs. So we will see during this particular webinar the derived forecast, the algorithm-based forecast, which is given session-wise, so that every session what the players are expected to do during the start of the session and the end of the session. Besides, you will be doing the market reading, noting down the initial lows and the highs around 3:30 GMT, and try to find out from time to time how exactly the players have made the moves in the market. Then I will also explain the trading strategy with the help of the trade call that you can try it in a demo trading platform and see the success in the trades, so that you will be able to understand how we can use the forecast which is given free on Mondays, and that can be used till Friday, and that can be fine-tuned using the market reading. So the trader, they themselves will be in a position to decide what sort of moves the players are expected to make by following the type of moves they are doing it in the market. Besides, to limit the risk, the trading strategy of using the hedging can be used, so that without depending upon anybody, the traders should be in a position to plan on the trades and earn consistently from the market. Now, the expected market moves for this week is the third week of April, so the trending move is expected from 17th to 21st of April. So the three sessions of the day with the session timings are mentioned here, and the days of this week are mentioned here. Then each day you will be able to find out what sort of moves the players are expected to make in each of the sessions, and also understand overall in what direction they are expected to make. Overall, this week they are expected to make the swing and rise moves in the case of Euro and GBP, as well as USD and USD CHF. As far as the denominator concerned, they will try to make a downward move. Say now they have done it in the case of yen, and an upward move in the case of CHF. Then they will alternate it with that of the upward move in the case of yen and downward move in the case of CHF. But Euro and GBP, slowly they will gain the levels during the course of the week. So what sort of moves they are expected to make in the market? Swing and firm up during that of the Japanese session today, and then swing and slide during the European session. After the slide, you can take a buy. Then they will make again a rise. So near the low, we can take a buy and book profit near the high. Once the spread becomes more than 40 pips between high and low, then the moves will be quick. Then if you commit positions, you should be able to close the position quickly with a shorter duration. Then tomorrow, Tuesday, they are expected to make an initial dip during that of the Japanese session, and then expected to rise towards close of the Japanese session, swing and rise during that of the European session, and then swing and slide during that of the US session. So they will try to make some upward move and then profit booking and slide and buy back again. Then Wednesday, swing and rise, swing and firm up, swing and rise. They are expected to make continuously the slow gaining move as an intentional move. Then on Thursday, they are expected to make a dip and rise, swing and rise, and swing and slide. So they will try to make the profit booking move, and then they will try to induce the long holders, those who are taken a buy after the rise, to liquidate the long position before the weekend rise. So we may come across another sideways move in the market. So they may not make any significant upward gaining move, even though mathematically I have derived the levels for them to reach, but they are invariably making about 100 pips swing in the market. So there could be possible reason that the volume might be low in the market, or the players are waiting for any effective decisions so that they will be able to make some good moves in the market. So one of the possible reason could be the traders' participation has come down in the market. That is why you come across the moves are very, very sluggish. Now, with regard to the range, they could rise from the 1.06 to 1.10 level in the case of euro. Then in the case of GBP, they could make a small dip to 1.2450, then rise again to 1.2850. The actual so far formed or given here, I will update it as and when they form the new high and the low. On Friday, I will show you what are the low and the high they are set, so that you will be able to compare it with it of the estimated, the actuals, and understand how reliable these calculations are. Then in the case of yen, 108.14 they formed and they made a big spread. 108.82 is the high, and after forming the new low, they are not breached the low. They are expected to slowly gain the level in the case of USD and consistently gain more levels. And afterwards, they will gain the levels in the case of euro and GBP. Now, if you watch carefully, they are holding closer to that of the low in the case of USDM and holding closer to that of euro as well as GBP. This is mainly to handle the yen crosses. Then in the case of CHF, they gained the level. When USDN is gaining the level, they will try to push down USD CHF alternatively. Then Canadian dollar, they could make a downward move slowly. It has come to 1.33 level and slowly it will come to 1.31 area. Then in the case of Australian dollar, they set the low on 0.7572 and probably the mathematical derived level is 75.50, and then slowly they are expected to gain the level. So in all, you'll come across the gaining moves, and among that of the denominators, some they will gain, some they will make the slide, and that is mainly to handle the crosses. That is how they are expected to make the moves in this particular week. So if you've got any question, you can ask me in the question answer window here. I'll be able to see the question and answer to your questions when I am just discussing about the expected market condition in this week. Then we'll come to that of the market reading using the initial lows or the highs set. In the case of euro, 1 point correction. This is a typo. So in the case of euro, 1.0603 is the low. They are set 1.06. 0.626 is the high. They are not breached the low or the high in the case of euro. Then in the case of GBP, 1.2525 is the low, 1.2546 is the high. They are not breached. And in the case of yen, 108.14, 108.82 are the lows and the highs. They are not breached. Then CHF 1.0034 is the low, 1.0058 is the high. Here again they have not breached the low or the high. Then Canadian dollar 1.3298 is the low, 1.3323 is the high. They have not breached the low or the high. Then Australian dollar 0.7572 is the low, 7594 is the high. They are not breached the low or the high. So in all, you find they are not made any significant breaching of the initial lows and the highs, what they are set around 3:30 GMT. They have made the spread more than 40 pips only in the case of yen, which indicates that during that of the Asian session, they come across some volume in the case of yen and not a significant condition in other currencies. Then Brenner's got a question. Do you think any volume will ever come back into the market so they can make bigger moves? It is $1 million question. And what normally happens is whenever the market undergoes drastic corrections, many people might lose money significantly. Then when the accounts are all closed and when many of the traders have lost the money beyond their capacity, then they will say that it is not a place for me to earn. Then they will just go away from the other market. Then the market has to look for the institutions where fresh investment comes from that of the traders. When the trader is not able to trade on his own, probably if he got some reserve, then he will think of putting it with that of the institutions like mutual funds. So that money will come into that of the market. And there you'll find the players will facilitate the institutions to earn following the technicals and fundamentals. Then you will find after the gain, the institutions will make very big announcement that they have done such a big earning in the market. And once they start giving ads and spread the news or ask the clients to get more clients, etc., you find that the traders who have lost money, about 20 to 25% might enter into the other market again by taking another chance. But new entrants will be tempted and they will come to that other market again. So it is something like the Brook story. People may come and go, but I will flow forever. So it is similar condition. And the market will continue to swing and continue to exist, but the traders may not be the same. So the traders might get shifted from one market to another market, or they may shy away from that other market. Because basically we need to understand that the market is considered as a place wherein scientifically you can trade. But when they find that scientific is not working properly, then they think about their luck, whether they are lucky enough to earn money. And if they consistently lose money, then instead of telling that they have not perceived the market correctly, they come to the conclusion that they are not lucky and go away from that of the trades. I've seen many of the traders who are just gone out of the trade and the markets, and they hesitate coming back into that because it is something like touching the fire. So if they get hurt with that of the fire, or if they are drowned in the water, then if you ask him to swim in water again, he will hesitate. Even though he would have learned swimming, but if he would have been trapped vulnerably in the spiraling water, then you'll find that person will hesitate entering into the water. So similar hesitation might be there with regard to that of the traders. Basically, what is more important is certain skills we try to learn and then apply, like driving a cycle. or driving a two-wheeler, a motorbike, or driving a car. We try to learn it and then enter into the market, enter into that of the driving. But unfortunately in trading, we straight away enter into the trading out of compulsion or out of extra money requirement or out of greed. So it might be of a different nature. And some people will be having the gambling tendency and they will enter into that other market. So in such a condition, then when they gain more money, then they feel like betting more money so that they can earn the entire world. So they increase their stake. And later on, when the market goes against, then they lose in a big way and shy away from the other market. Then later on, they think of learning the trading. By the time they are deprived of money. This is what the condition you find invariably predominant of the traders, irrespective of the country they belong to. As far as the human fear is concerned, which is not discriminatory, irrespective of the race or any country person or educated or uneducated, whatever it is, but the market fear appears to be the same. Even many of the fund managers, they also show similar fear, even though they are supposed to be professional in nature to control the fear. But they find that human fear is really acting against the traders. And especially when the fear grips in, they are bound to do the distress trades. Okay, another question. Why do a lot of traders say Fibonacci is a good tool for Forex? I never seen the benefit of it. Okay, see, it is something like whatever the available tool they have to make use of. They cannot create anything new unless and otherwise they are innovative. So they need to have an innovative urge, and with which they will be able to definitely find a new method. And many of the traders, what they do is they try to perceive something by accident and they try to follow it and consistently earn, and they may not be able to explain to others what their gut feel and how they are able to earn money. So sometimes what they have done may not have any scientific reason, but they find that they are able to earn money by following such methods. So here you come across similarly Fibonacci retracement is also one such thing. There are many traders who have followed the Fibonacci retracement and they are not able to understand whether it is a 33% retracement or 38% retracement, 50% retracement or 78% or 92% and 100% retracement. So it all depends. If you enter into the market and then subsequently when the market has bounced back and goes up, then obviously you find the Fibonacci is working well. If the market retraces up to that of the second order Fibonacci retracement, then you might be stopped out. Or probably if you kept the stop wider enough and it is not filled, then you think that that method is fine. But during that of the trend reversal time, even such stops will be filled. If it is 100, 120 pips away, then you will think that, okay, it is not working well. So there is no question of a forecast giving probability and chances. No, it should be consistent. So if I say my forecast analysis gives about 60% or 70% probably the right calls, then you won't be knowing at a given time whether I am doing the trade in the right call. And 30% it can give wrong calls. And when you are trying to take a position, you don't know whether the call will fall in that 30%. So as you know that human uncertainty will invariably trigger the fear, market fear. Then you hesitate entering into the market. And once you find that the market is moving as per your expectations, then immediately you jump into that market. And later on you see that even though you wanted to buy, but after the rise you buy, but after that the market fails to rise, then you get struck. So it is a question of right perception of the market. And these tools, we try to use it in order to get the perception right. So in order to fine tune our perception, we try to use various statistical tools. But what the players do is, they pretend the market appear the technical analysis true, so that when the traders take small position and try to trade, then the going is good, and when they are able to earn 10 to 15 pips or 20 pips profit, then he commits more positions in order to earn, thinking that it is working well. Unfortunately, what happens at that time, the players, when the volume improves, make one whipsaw move and trigger all the stops. So this is the game plan of the players. So we need to read who is against us and try to follow the limitations of such people, and then try to trade in order to avoid getting hurt. So initial lows and the highs, you find they are not breached. So invariably it leads to the conclusion the market is really subdued. And in some places you come across, because of Easter Sunday, they have a holiday on Monday. So obviously the volume will also be relatively low. So probably the volume could pick up tomorrow. Now the trade calls for the day. Near that of the low, we can keep a buy limit order and keep 30 pips away the hedge order. Similarly, in the case of GBP, about 25 pips below, we can keep the hedge order when they are doing a downward stop, and during that of the European session, we can try to pick up a buy and then book profit during that of the US session rise. Week beginning, they are known to make false move during the trending time. So wait for such quick false move. By the time they will increase the spread between the high and the low, then later on near that of the low, when the low is not being breached for more than 30 minutes in a session, you can try to take a buy that will give 100% profit. Now the 3 sessions and the subdivisions of the sessions are given in order to follow the fine-tuned session timings, so that when I say early and the late sessions, you can understand what are the time frame in GMT. The GMT time is given here, which is a 24 hours clock. So follow that so that you will be able to really understand what the players are trying to do in a given day, rather than trying to find out what happens during your local day. In your local day, if you try to perceive the market, you may not be able to get the right insight. If you understand the market is 24 hours, it's a global market, and so it starts from 0000 GMT, ends by 23:59 GMT, then you will be able to understand how they are making the cyclical moves in the market. So if you got any question, I can answer to those questions. Otherwise, I'll try to conclude the webinar. I'll come back on Friday, 21st of April, and try to review the forecast, what I've given it today, so that you will be able to understand how reliable the forecast is. Because why I'm telling this every week What is the need for me to confirm it every week? Once I prove that it is working well in the market, then I can simply say that it is working. And I can simply say that 99% of the occasions the forecast has come true. I can just do that. But a newcomer comes in and he wants to find out what happens to that other market. Then I cannot simply say that it has been already proved. So besides, I want the traders to develop the gut feel and develop their insight rather than trying to follow me or anybody for that matter. So when they give the trigger for the inner urge that they need to find an appropriate solution to earn money from the other market, then new innovative methods will emerge in the market, which will outbeat the players. The players are also such. They are not born rich, not born with a silver spoon or a golden spoon. They are also ordinary people. They somehow, by luck and circumstances, they have come to that of the top. And many of the richest in the world, if you know, or see their history, or see their life history, you know that they are school dropouts and things like that. But the perseverance is the one which has made them to become number one in the world. And unfortunately, what happens, such perseverance triggers the unlimited greed also. So there you should be able to balance it. So if you fail to balance the unlimited greed and the perseverance, then you find it becomes detrimental to the same person. What the urge, which is supposed to be very constructive and progressive for a person, becomes detrimental when it is beyond their capacity or when it dominates the normal human reasoning ability. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back on Friday, 21st of April and review the forecast and also explain to you what could happen to the market on that day and the following weeks. Wish you all the best in your trades. See you on Friday.